Okay, so we're still looking at the question for Amano, right? So we've made the trading account, all right? We found our gross profit 276,000 kwacha, all right? Now we're supposed to make our statement of profit or loss. The main purpose of the statement of the profit or loss is to find out our net profit or net loss. Remember, whenever you hear net in accounts, it just means you are deducting. So we're going to be deducting our profit from the expenses we incur as a business. These are administrative expenses, selling expenses. Okay, selling expenses, these are expenses you incur as the business, like advertising. Okay, then administrative expenses, these are expenses within the office. Okay, so for the statement of profit or loss, the main thing you're just going to be recording are any forms of income or gains. Okay, any form of income or gains, and any forms of expenses or losses. All right, that's all we want in the statement of profit or loss. Any forms of income or gains, or any forms of expenses or losses. All right, so we're going to look at the information given to us here, and we're going to look for any forms of income on the trial balance. Okay, so we have discount received. Okay, discount received is like a gain to us because this is a discount we received from our supplier. Okay, we have paid less. All right, so we have saved some money. All right, so that is a gain. Okay, so discount received, so we'll add it to our gross profit. Okay, then, okay, if you notice here on the question, it says the allowance for receivables is to be 5% of the receivables, right? Remember, the receivables, these are the people who owe us money, right? And the allowance for receivables, this is the money we're estimating. This is the percentage of money we estimate that we're not going to get back, right? So they say it's 5% of the receivables. So if we go to our trial balance, right, we can see the amount for receivables is 60,000, all right? People are owing us 60,000, all right? And then we can see the allowance for receivables at 1st January 2021 is 4,000. All right, now this is the year end. All right, and we've been told the allowance for receivables is 5% of the receivables. So we're going to get 5% of 60,000. Okay, we get 5% of 60,000. 5% of 60,000 is 3,000. All right, now we notice that we have calculated 3,000, that's as our allowance for receivables. But at the beginning of the year, our allowance for receivables was 4,000. But at the year end now, it's 3,000. So we can see that there has been a decrease in the allowance for receivables. Okay, so you have to take note of this. Whenever there is a decrease in the allowance for receivables, okay, the first thing you're going to do is you're going to calculate by how much it has decreased by. All right, so we calculated 3,000, and on our trial balance we have 4,000. So 4,000 minus 3,000, it has decreased by 1,000. Our allowance for receivables has decreased by 1,000. So a decrease in the allowance for receivables is added to the gross profit. All right, it's a form of, it's like a gain also. Okay, so we go to our this sheet over here. All right, okay, so we're going to add our incomes. Okay, so the allowance for receivables, as you see, we did not put in 3,000 here. All right, 3,000 is 5% of 60,000. Then one interested in the amount the allowance for receivables has decreased by, and it decreased by 1,000. All right, Then we have discount received 6,000. Right, so we're going to total up our incomes. Okay, 6,000 plus 1,000, we get 7,000. Right, we get 7,000. Right. So we are done with any forms of income or gains. Now we're going to look at their expenses or losses. All right. As we can see, we have advertising here, 16,000. Right, 16,000. We have bank interest. Okay, but we borrowed money. We have a bank loan. We borrowed money, so we have to pay back interest. All right, so that is a form of an expense to us. Okay, we have carriage outwards. Okay, whenever you deliver goods to your customers, all right, you are going to also incur expenses. Okay, for you to deliver goods somewhere, obviously you have to fuel is going to be an expense for you. Okay, fuel is going to be an expense for you. So that's what carriage outwards is. It's you delivering goods to your customers. Okay, 24,000. We have computer expenses, 20,000. But if we come also on the additional information, right, we had an engineer who gave an estimate of 1,000 to repair the computer, and they repaired the computer. We haven't yet paid them, all right, but they have done the work, all right. So this is an accrued expense, okay. So this 1,000. So what you also have to remember is that adjustments for accruals, right? Accruals, you're always going to add them, okay. Accruals, you add. Prepayments you subtract, right? Accruals you add, prepayments you subtract. So we have an accrual of 1,000. We're going to add it to the computer expenses, all right? Accruals we add, all right? So we add it to our computer expenses, all right? That's why we get 20 plus 1,000, 21,000, all right? Then as you can see here, there's a prepayment for rent, which was 4,000. All right. So what you have to remember is prepayments you're going to subtract. All right. Accruals you add, prepayments you subtract. All right. So there's a prepayment for rent, 4,000. If we go to our trial balance, we can see rent here, 12,000. Right. So we're going to subtract 12,000 minus 4,000. All right. Because remember, prepayments we subtract, accruals we add. Okay, that's how we get 8,000. All right. We have another accrual for power 2,000. So what are we going to add it to? We go to our trial balance, and you can see here, where's power? Power here, the power 8,000. So we're going to add the accrual 8,000 plus 2,000. Okay. And then we have depreciation of the fixtures, all right? That's also another expense, all right? And we have salaries, okay? So what's going to happen is we're going to tabulate, okay, our total expenses, all right? Tabulate our total expenses here. When you add all of these together, you are supposed to get 185,000. This is our total expenses, 185,000. And then we're going to subtract that from our gross profit, all right? So we're going to say 283,000, all right? Remember, we added our gross profit with our incomes. So we say 283,000 minus 185,000, we get 98,000. So that is our net profit.